What's up, guys? Roger here with Vantage Realty and Home Loans. My first ever live video, so thank you so much for joining me. Today, I'm going to talk about mortgage interest rates. I've been asked what's going on with interest rates, where they expect them to go, where are they right now. So in this video, I'm going to talk about interest rates as of today, where I expect them to go in the next 6 months, and the different factors that may contribute to those interest rates changing. So if you own a house or looking to buy a house, you're a first-time home buyer, this is the video for you. All right, so the first things first, Fannie Mae came out with an announcement last week. If you missed it, it's a pretty big news. Fannie Mae added a 0.5% fee to all refinance transactions across the board. So if you own a house and you're looking to refinance, now it's going to cost a little bit more, or your interest rate is going to be a little bit higher. Okay, so that sucks. And already, interest rates have been going up and down in a range over the last, they always do. Interest rates are always going up and down in a certain range. And right now they're on the high end of the range. And in addition to that, we added that 0.5 fee from Fannie Mae. So it seems very, things don't look very promising right now. But we're going to dive into that and see if it's going to get worse or if it could get better. Okay. So we covered Fannie Mae. Okay. So what I'm going to do in this video for a few minutes is I'm going to talk about what your interest rate would be if you're buying a house and what your interest rate would be if you're refinancing. So if you're a buyer and you're looking to buy a house with, for let's say in LA County, and you're looking to buy a house for $500,000 and you're going to put 10% down, as of today, your interest rate would be 3.44%. Okay. So again, about 2 weeks ago, 3 weeks ago, a month ago, rates were a little bit better. So instead of 3.44, your rate would be maybe 3.25, 3.125, or you could take like a 3.3 and get credit, which is what I helped a couple of people do who are buying. So they got credit with that 3.3% rate. They use that credit towards their closing costs. And so that's kind of what the interest rate would be if you're looking to buy a house. So if you're looking to buy a house right now, and you're about to go into escrow, there's not a lot you can do. This is just what the rates are. You can always refinance down the road if rates come down, which again, we'll discuss in a couple minutes. So that would be your rate if you're looking to buy a house. Now, if you own a house and you're looking at refinancing, so although Fannie Mae kind of screwed us a little bit with that 0.5% fee, banks like Quicken are really offering a huge bonus if you have a good credit score. Okay, so I've talked on this channel many times about the importance of a good credit score. If you go back a few videos, the very first thing you should do before you even buy a house is get out of debt as much as you can, get your credit score up. So I'm going to show you an example of what your rate would be right now if you're refinancing based on a 719 credit score, which is not bad, but the difference between 719 and 720. So at 720, that's when Quicken offers that bonus basically to homeowners and gives you the really good rate. So I'm just going to take a quick peek over here behind the scenes. So if you have a 719 credit score, let's say you own $1 million house in LA, you owe $600,000. So $600,000 would put you in the high balance range. So conventional loans are up to 510 in LA County. High balance is considered 510 to 765. Okay, so if your loan is between 510,000, 765,000, your loan is high balance. Okay, so on a high balance loan, your loan's 600,000, your house is worth $1 million. You just want to lower your interest rate. If your credit score was 719, your rate would be 3.44%. Now, if you raise your credit 1 point, just one measly little point from 719 to 720, okay, at 720, where you get that bonus from Quicken, your rate would be 3%. Okay. So you go from a 3.44 down to 3. I mean, that's 0.5% on the biggest debt that you have. So the difference in the monthly payment would be $150. Okay. And, you know, sometimes we go out to dinner and we spend $150. And it doesn't seem like a big deal. But if you took $150 and invested it in the stock market, in an S&P 500 or SPDR index fund, $150 a month over 30 or 40 years is $500,000, guys. $500,000 just for having a credit score 1 point higher. You save $150 a month and you take that money and put it in the market. That's $500,000. $500,000. Guys, are you hearing me? $500,000 over 30 or 40 years. Okay. And again, you know, I'm relatively young. I think my audience is relatively young, and 30 to 40 years seems like a very, very long time. It is a long time. Okay. But if you're young enough and you could start putting away $150 and have that grow to $500,000. Okay. So the point I'm trying to get at, you understand my point. My point is creating wealth is not that hard. Okay. There is enough money in the world for all of us to be abundant and to literally not have to worry about money. Right. And that's something that I dealt with growing up. We were always worried about money. Okay. But if you can just educate yourselves, and not just like, you know, my channel, but other channels, like the Dave Ramsey's and the, you know, Graham Stephen and these guys who are investing in real estate, doing it the right way, being on a budget, you know, so on and so forth. You can really create that wealth. It's not that hard. You just got to be smart about it. Okay. So back to interest rates. Okay. So basically Quicken is offering these really, really amazing interest rates. Sorry, my phone was blowing up and it's my first time doing a live. So it's getting distracted. I need to flip this thing upside down. Okay. So Quicken is offering these bonuses if you have a good credit score. Okay. So that's kind of what's happening right now. Okay. Now what we expect to happen in the next 3 to 6 months, talking to my colleagues, we're on the high end with Fannie Mae coming out and saying what they, you know, laying down the 0.5%. Plus we're on the high end of the kind of range that we're in. Rates are not looking that great right now, but we do expect them to come back down. Okay. So we're expecting in the next 3 to 6 months leading up to this election for rates to come back down in the low 3s, high 2s. Okay. So that's what we expect to happen. So if you're looking to refinance and you're like, oh man, did I miss the boat? For temporarily you did, but if you are patient and wait another month or two, because these rates are not going to, you know, come back down within a day or a week. It might take a couple of months. But if you hang tight, you still should have an opportunity to refinance in the low 3s, high 2% at little to no cost. So that's what we expect to happen in the coming months. So so we got the election coming up. That's going to affect interest rates. You know, a lot of political stuff and world news that affects interest rates, but that's kind of what we expect to happen. Thank you so much for watching. And if you haven't already done so, please subscribe to my channel. You know, I've been posting videos every single Friday this entire year, and I missed my first week of not posting a video. So it's kind of being hard on myself, but I learned to forgive. It's going to be okay. And I appreciate you guys sticking with me, watching my channel, you know, leaving a comment, emailing me your questions. I'm so happy to help you guys out. Please, you know, if you're a home buyer or a homeowner and you need a resource, please feel free to, you know, use me and my team as a resource. We're here to just help, educate, whatever it is we could do. Please let us know. And also I'm going to be back on it. Expect another video this Friday and every single Friday to the end of the year. And this Friday, I'm going to be talking about step 5 in the home buying process. If you're a home buyer, I'm making a video series just for you, a 6-step, 6 video series highlighting the 6 major steps when you buy a home in detail. So go back, watch that series if you haven't already, if you're a first-time home buyer. And also, before you start the 6-part series, there's the very first thing that you need to do before the 6-part series, before you start looking to buy a house. And that is fix your credit and get out of debt. So watch that, watch the 6-part series, leave a comment, subscribe to my channel, share it with someone who might find it helpful. And thank you again. And I'll see you guys soon. Bye-bye.